which they kind of consider more as to be the Middle East. It's weird how they've done it and not just, Africa as a continent. But interestingly, managers don't think that there's too much competition in Africa. They do feel that there aren't that many opportunities, that the opportunities are too small, and they feel like entry valuations are actually quite cheap. So I thought that was quite good. Interestingly enough, Brazil had a political risk of just 10% back in, when was this, 2013, which, if you've been reading the news lately, you'll know that Brazil has massive political risk at the moment. So yeah, I think the big things with Africa is this lack of liquidity. The markets are small, they're very thinly traded. It's hard to pull your money out. It's hard to put your money in, especially when you're coming in as a big boy investor of, say, an institution, with a pension fund or something like that. The markets are too small. There's also currency volatility. I mean, the rand experiences it as well. It's jumping all over the place. African currencies are the same. They're jumping all up around, and this introduces another risk that is not necessarily matched to your liabilities. Think if you're a pension fund and you're paying out in US dollars, you don't want to be exposed to all the African currencies. Political uncertainty, again, that's a big one in Africa. Some countries are moving towards better democracy, but there's still poor human rights in a lot of countries. There's some presidents who've been like president for 30 years. There is like a lot of like revolutions and coups and all that type of stuff happening. There's also a lack of transparency because a lot of these markets are quite new. Their regulations aren't necessarily up to international standards, or they're written in different languages. So the transparency is still an issue in Africa. Like we said, the bond market, having all of its issues, it also still has poor credit rating and is not suitable as an investment grade. Interestingly enough, when it comes to Africa and you want to, let's say you invest in Africa and you're like, how did I do compared to everybody else? They don't actually have a standard benchmark. So there's a whole bunch of benchmarks, but some include South Africa. But then if they include South Africa, it makes up like 80% of the benchmark. So they take South Africa out, but then Nigeria accounts for like 50% of the benchmark. And then some of them try to cap it, and some of them include Egypt. Some of them are like, no, Egypt's not in Africa. And benchmarks are absolutely stuffed up in Africa. Like no one really knows how to measure the benchmark, which means when it comes to performance fees or seeing how you did to your competitors, it's very, very difficult. It also means a passive investment strategy is difficult to take in on Africa, which means you have to go active, which increases fees. But how do you work out performance fees? It's just a mess. There also isn't really a derivative market in Africa. There is in South Africa, but for the rest of Africa, you're kind of exposed to the currency risks and defaults and all of these type of things. In your more developed markets, you can just go and say, I want these derivatives, want these little options, want these little futures, and you're all fine and everything's hunky-dory. In Africa, it's kind of still like the wild in these financial markets. You're exposed to these risks, and it's very difficult to hedge them out. Then I just want to look at a few more challenges that the paper brought up. They said poor productivity and higher labor costs. I think that's when you're comparing it to Asia, which has very high productivity and very cheap labor costs. They said also Africa has poor public health systems, which means as an investor, you don't really want to be spending too much time in these African places because you could get like Ebola or these diseases, and there's not really good doctors there. So it's a risk for your own personal safety when you go as an investor into these places, and you do want to do that for due diligence and all of that type of stuff. There still is also a lack of education and skills development, which means if you invest in a company and it is doing well, it's very difficult for that company to grow and hire other people because there's no one really of that skill. So I'm hoping, more and more, but that should increase in time. People, education, I think, is on an upward trend. Lack of access to finance. I mean, Africa doesn't have, like in Europe, there's these massive banks that have got lots of money and they can flood the market with liquidity and finance all these projects. Africa doesn't really have that many big banks or access to that type of finance. Africa, like I said, there's a lot of government bureaucracy and hindrances. In South Africa, we have this thing called BEE, which just makes investing a lot more complicated for foreign investors. They now have to learn these new regulations and these new rules. Governments do make, like I said, the political leadership in Africa is not that good, and they do get in the way of business. Africa is also exposed to, if interest rates would rise in the developed world, then that takes away like the whole incentive of coming to Africa. So at the moment, a lot of people are coming to Africa because it's a chance to get these high returns, which they can't get in their local markets. But if interest rates increase back in their local home markets, then yeah, they're going to be like, cheers, Africa, we don't need you. So that is a big risk. Again, corruption, I've mentioned it before, but it's worth mentioning again. Africa still has corruption issues. High default risk. I mean, Mozambique defaulted on its bonds earlier this year. Ivory Coast, I think, defaulted back in 2013, around there. So, I mean, bonds are supposed to be these safe instruments, and they are experiencing high defaults. And you saw that the returns, they're high, but they're not that high. I mean, it's like between 5 and 9%, and these guys are actually defaulting. So that is a risk not to be underestimated. Like I said, regulation requirements are a nightmare. Africa's not one country like everybody seems to think it is. Each country will have its own rules, its own regulations, its own languages, and to try and get around all of that or understand it, you need a lot of lawyers, and it is quite difficult. Also, capacity constraints in the smaller markets. If you are coming in with $1 billion and you want to invest it, you are going to be shifting the market. The market will not have capacity to take on such a big investment, which kind of then, if you're an institutional investor, doesn't really make it worth your time to just put a little bit of money into Africa, seeing all the information and knowledge that you have to get around the political and economic factors affecting the local markets. Then you also have sector concentration. So if you do manage to get into the markets, there's only like 3 companies really. Like there's telecoms, there's minings, and there might be, I don't know, a banking share. There's not that much choice within these markets that you're actually getting like you get in the developed markets. Developed markets, they've got so many shares. In the African markets, there's still just a few. It's just the big companies. Like I say, telecommunications is quite a big one. But yeah, I think, let me just nail this back in. The biggest issue, though, is the lack of liquidity, and it's a mismatch for a lot of institutional investors, and it does bring in a lot of risk. Liquidity. If that's the one thing you remember from this video, is remember that Africa does have a liquidity problem. Anyway, I just wanted to end off this video with a little picture of Africa. The paper tried to say that a misconception of Africa is that we're very commodity based, and they were trying to show that a lot of our GDPs are made up of different things. So you can see in Egypt and Kenya and South Africa, services make up a much bigger chunk than resources. Agriculture is also important, and so is manufacturing in a whole bunch of these economies. Thanks, guys. Let me say goodbye. Cheers.